Hey guys, good morning to all of you and welcome in this session of Oliveboard. This is Dr. Pradyumna Sharma, and as you guys are aware that we are doing one lecture a day. We are following this series for your reference purpose, that if you want to prepare the most important topics, most important selective topics from your syllabus, you can follow this series. And if you want a comprehensive preparation which covers each and every aspect, then you can follow the super elite plan also. So you can join the super elite plan through the PDY code. You can subscribe the channel if you are new to the channel. Believe me, super elite is an excellent plan to join to cover your exam in the remaining like 40 days. Then all in one, it's a complete batch that is related to coverage of content and multiple choice questions. If you want to cover content and MCQs, then this all in one batch is an excellent option for you. Again, you can join this also with the help of PDY code. Now, today we will be talking about a very important topic, that is preparation of final accounts. And preparation of final accounts is a format driven topic where you will be able to score marks if you remember certain formats. But before going into it, let's understand the journey, that how accounting process reaches up to the final accounts level. So first of all, in any organization, a bill, or we can call it as a voucher, is generated. Then this bill or voucher is recorded in the primary book of entry, that is journal. Once it is recorded in the journal, then it is transferred to the next document called ledger. After classification of the accounts in ledger, all the accounts are summarized in trial balance. And after making of the trial balance, the process of making final account starts. Now the process of final account starts. First of all, a trading account is prepared, and by making a trading account, we calculate the gross profit of the company. After that, a profit and loss account is prepared. By making this, an organization identifies the net profit of the company. After that, company prepares profit and loss appropriation account. That account is not a compulsory one, but if you as a company, if you distributes the dividend, if you make some reserves for the future, you need to prepare an appropriation account, because this account shows the distribution of profit. Then balance sheet is prepared, and that balance sheet tells us the position of business. So end of the day, this is the complete process which is followed when final accounts of any organization is prepared. Let's deep dive into certain concepts and certain things. Before making the final accounts, we have to make some adjustments, and those adjustments are very important for your exam. These adjustments required because when you prepare the final accounts, all these adjustments belongs to the previous year. There may be some expenditure which you should have been done, but it's not done yet. That is outstanding expenses. There may be some expenses which you have paid in advance. There may be some income which you should have received till date but you have not received, that is accrued income. Then there may be some incomes which you have received in advance. How to record these four is very important, and what actually they ask from you in the exam out of this is very important. See, outstanding expenses means what? Expenses incurred but not done. This is called what? Outstanding expenses. Prepaid expenses means what? Expenses done in advance. Accrued income means what? It is an income which is earned but not received. And unearned income means what? A kind of income which is received in advance. Now, other than definition, they ask two things from you. Let me summarize this for you, just for your ready reference, so that you will be easily able to score marks out of this topic. Profit and how these adjustments are treated in profit and loss account and in balance sheet. Remember, outstanding expenses are always added in the P&L, and it is current liability in the balance sheet of the company. When we talk about the prepaid expenses, it is always less or reduced. Minus from the profit and loss account, or minus from the profit of the company, and it is shown as a current asset in the balance sheet. Third one is accrued income, and accrued income is always added in the P&L account, and it is also a current asset. Then unearned income is again reduced from the profit, and it is a current liability. If you remember this simple table, you will easily be able to score good marks, at least 2 marks out of it in the exam. That's the third one, and that's the fourth one. Okay. Now, if you want to remember something something additional, then you can remember one more thing. What will happen in journal entry? Because it is a liability is always credited, so outstanding expenses will always be credited, assets are always debited, current asset is again always debited, and current liability is credited. So in the journal, when you make the journal entry out of it, outstanding expenses will be credited, prepaid expenses will be debited, accrued income will be debited, and unearned income will be credited. Now, let's understand the format of trading account. Remember two very important things about the trading account. First, it records all the direct expenses and direct income which is related to the product, and it is used to calculate gross profit. By making a trading account, we calculate the gross profit. So there will be transactions like opening stock, purchase. If you purchase something and returned out of it, then we will less that return. Any carriage inwards, cartage expenses, dock charges, wages, duty. Duty means tax, freight. All these things are debited. Sales, any return of the sales is reduced from here, and closing stock. These things will be recorded in the debit side of the trading account, and finally the value of gross profit will be calculated by reducing. This is the debit side, this is the credit side. So gross profit will be when the credit side is greater than debit side. So when we reduce the total of debit side from the credit side, we have the value of gross profit, because total of these two sides should be equal to each other. Then the format of the profit and loss account. Remember, the gross profit we calculate in the trading account is transferred in the opposite side of the profit and loss account. Again, two things. All the indirect income and indirect expenses are recorded in the profit and loss account, and by making a profit and loss account, net profit is calculated. So all the indirect expenses are salary, electricity, conveyance, depreciation, office charges, any other common expenses, tax expenditure. Then we find the net profit of the business. When we make the total, these two sides will come equal. Net profit will appear when again credit side of the profit and loss account is higher than the debit side. After making a profit and loss account, we prepare a profit and loss appropriation account. This format is of profit and loss appropriation account. Give me 1 second. Let me write it in the side way. This is profit and loss appropriation account. Profit and loss appropriation account shows us the distribution of the profit. So whatever we have earned in the previous years, and whatever we have earned in the current year, and whatever refund we have got from the income tax department, this is the total amount available for us for the distribution as a profit. We will write that in the credit side. Then out of this total fund, we will transfer things to the reserve for the debenture payment reserve, will pay off any additional tax liability, will pay interim dividend, will pay the final dividend, and finally credit side minus debit side, whatever we receive will be transferred to the balance sheet. This amount of profit will go to the balance sheet from the profit and loss appropriation account. Then in the balance sheet, that profit will be added here. Capital plus profit will be in the liability side, any loan taken, any current liability, outstanding expenses is a current liability. We just discussed with the adjustment discussion, bank OD and creditors. In the asset side, fixed assets and current assets, cash, debtor, bills receivable, stock. Total of both the sides of the balance sheet if matching with each other, that means that your accounting is perfect, there is no mistake in the accounting. So these are the things which we need to cover in this particular topic, these formats, certain concepts, that adjustment summary you have to remember. If you like the session, please don't forget to like and subscribe the channel. You can join me in the super elite plan through the PDY code, and you can prepare all your chapters in a very crisp and summarized way for the examination purpose. You can also join me through the crash and cracker combination all in one batch, and you can cover your content easily there also. So we'll meet in the next session with the new topic and with the new discussion. Till then, have a great day. Bye bye. Thank you guys. Thank you very much. Remember, in case you have any doubt, any query related to anything in the things which we are discussing on a regular basis, don't forget to put your queries in the chat section or the comment section, so that me or any of my team member could respond to that. If you have any academic query, you can join the batch, you can join me through the community, and through that also you can connect with me. So thank you guys, thank you very much for joining me in this session. We'll meet tomorrow with the new topic, with the new discussion. Till then, have a great day. Thank you. Don't forget to like the session, and don't forget to put your comment that you are liking these sessions or you need something else or some additional things also. Let us know. Thank you guys. Bye bye. Thank you.